question. I've got Roy in Fort Worth. Hi, Roy. How are you?
Good, Basil. How you doing?
I'm always chuckling. My grandson's name, Roy. How you doing, Roy?
Good, good. Yeah, we talked about that before.
I
Listen,
know.
since I didn't get into natural gas on this upswing, where could we get in on a downturn?
So now it's really a very good question, because normally you'd be looking at any price movement like this. Folks, the natural gas continuous contract that I look at now, people who trade it look at a whole bunch of other things. I'm just looking at this chart. Has gone from the 200 period moving average low just back in September. It's chugging around at about 2.86. Oh, and then it breaks above and it goes to 3.4 and it pulls back, and then it holds the 50 period moving average around about 318, I think it was, 313, and out of the blue it gaps up on the 5th of November. It just breaks away. On the 2nd, it closes ho hum 3.284. The next day it takes off. The low is 3.437. High is 3.576, and then it makes a peak F/B as if it's a continuation pattern from the previous high of E. I actually think that's a B. And what do we do today? We scream. I really mean scream to four. I can imagine if you're short, screaming is the word. 4.929, and instead of giving back a whole chunk and being right now under 442, it's trading at 4.70. And everything about it for me looks like, yes, this is extended. Yes, this could suddenly pull back. But the MACD is really strong. Stochastics at 87%. On balance volume is only in C. So this says to me this is probably just a leg C. I'm going to say, Roy, I think you got the right idea as a trade. And if it's a trade, you want at least the day that it pulls back almost $1.35. Well, it's done the intraday, but you want it from the close of one day to the next day. So you'd be looking at something like the DGAZ.
Well,
How would you?
Or that or UGAZ, UGAZ.
Okay, let me go to UGAZ. I think that's the 2-to-1, right? And the other one is, I think. Let me just check which one this is. I've not traded this. Well, this is 3 times long. Okay. Oh, this is 3 times long. Would you actually short the position, or would you buy the opposite?
Yeah. Well, if I buy the opposite, the DGAZ.
Yes. Okay. So let's go right there. DGAZ trading right now. So, folks, we're looking at the 3 times. It's called VS 3 times inverse natural gas. Natural gas. What is there? Something else to the name? ETN. It's an ETN, not an ETF, so it's notes. So this is what I'm looking at. There is every reason to believe that even though this is just really the start of winter, that if you were to do this as a trade, you have to be thinking of it only as a trade. And here's the reason why is that not only are you playing the 3 times, today alone, it is down 41%. So you do not want to be on the wrong side of this. So I'm going to say to you, if you want to time it, I'm going to the continuous contract. I want to use the root, and that for me is the natural gas continuous contract. The root says it's trading at 4.672. I'm visually and technically, almost everything about it says, yes, it's overextended, but I'm also looking at it as if to say there could be one pullback one day, and then there could be a nominal new high. And here's what I'm looking at. I'll try to do it as if we aren't going to talk again until this happens, but I'll look at it every day in any case. And let's just say that tomorrow there's actually a little bit of a pullback, and it goes to 5.55, if it goes below 4, if it actually closes below 4.30, then you're going to have to wait a little longer. Then I have to call this an alternate count. I'd prefer not to. I think it's a leg C right now. So you want to see tomorrow, no matter what happens over the next 1.5 days, I don't want to see it go below 4. I'm going to be very strict about this. 450. If it goes below 450, I'm not going to say to you, just set it aside. It's just way too risky as a short. But if it holds, and then that's Thursday, and then by Friday, if it spirals up and it can get to the 5 point something area, I'm going to say to you, don't do anything on a Friday afternoon. You've got the whole of Sunday night, you've got the whole of Sunday pre-market, and then you've got Monday. If at that point I'm looking at it and I suspect that it is really close to some kind of a reversal, and I much prefer for it to have another peak here and have that leg going up as a potential D, then I'm going to say to you, here are the parameters. So we'll look at it again either Friday or Monday as a trade. On a trade right now, I would not do anything. In fact, I'd probably say to you, you know what? While you're waiting, if you want to have a quick trade in a short-term position, the 120-minute chart, let me even go to the, instead of the E-mini right now, which gave that peak F, let me go to natural gas, and I'll tell you what I'm looking at. Yeah, so even on a intraday basis, it's come all the way back from the high of the day to the low of the day, and now it's in leg A, B, it's in leg C to the upside in what I call that rectangle formation. I was going to say to you, I could even look at this and say, why don't you trade it on the long side, and then you can switch. All of this is really dangerous. Roy, if you can hold on 1 second through the break, there are a couple of numbers I want to look at, and then I can get back to you. Can you hold on?
Yeah, sure, no problem.
Okay. We'll be back with Roy in Fort Worth, and we're going to be looking at UNG in a little more detail on the short to very short term. We're looking at natural gas, and it is up 0.638 at 4.739. You can see I've got you on the 10-minute chart, a peak F in the Chapman wave. It comes down, it forms this rectangle formation, and we've got a Chapman wave inside buy mode in a leg C. So in the den, Peaky in the den said that there's a hedge fund that might have blown up. Let me see what he said. I'm not going to be able to find it. Natural gas up because an energy hedge fund blew up. So I asked him, is that just his guess, or is that what he's, and he said he's going to try to post a link. I think he's trying to find the link. So I really, that to me, now there's a completely different analysis that I have. And here's what I'm looking at. If I'm looking at natural gas in the chart, and I see this, I'm saying, you know, the monthly chart has gone from the whole 3.4 area to the 2.7, and they've really, you're looking at this, and this is a whole winter's worth of natural gas extension. I'm not even sure it would have gone to the 4.7 area or higher, 4.9 area, if it wasn't for something like this, certainly not in this kind of time. So if they were caught short and it's not the weather, then we're looking at two separate things. It should revert back to the mean at some point. So now I'm saying your thinking is exactly correct. How do you trade this? Whoa, this is a tough one, because in the very short term, there's going to be enough residual pain that we don't know what they're covering. They might still have a lot more to cover, and that just leaves the people in charge. They're saying, hey, let them cover. We're not going to do anything. Let it go to wherever it's going to go. So let it play out. And what I would say to you is this. If you're watching this closely and it's at 4.736, I still would prefer for it to go and retest the high and to make another nominal high. If after that, there's just, you're watching it and within a 2-minute spate of time, it drops very sharply, very quickly, and I prefer it not to be today. And maybe tomorrow, maybe the next day, you can grab that inverse and you can get it, put a tight stop in, and the moment you've got a gain of, I don't know what it is in money because I've never traded it, but I can tell you what I would look at it in points. The moment you've got a 5% gain on it, let's call it a 25 cent to a 30 cent gain. Immediately lock in some profit and then put your stop at the entry price and let it go. And that's all you can do, because if it's going to come down, it's going to come down pretty quickly, because if it was just short covering, it means as soon as the shorts, as soon as that's done, it reverts back to not maybe the mean, but it'll at least come back to probably the 4 or the 380 area, and then we start all over again for the winter session. Am I making myself a little bit clear?
Sure. What about, tomorrow they release how much they have in supply and everything. I was wondering, I hadn't heard about the explosion or so forth. I wonder how that'll affect things.
Is that at 10:30 Eastern time tomorrow morning?
That's correct.
Okay, so then maybe that's what you want to wait for. Maybe there's a bounce because of whatever it is. I would prefer for it to go higher, and then if you chase an inversion, a reversion to the downside, then you're okay. I just don't want you to do it here with there's too many unknowns, and what a risk. Let's put it this way, in a matter of 3 seconds, you might not even be able to see the stop hit because it could gap over your stop so quickly. So I'm just saying, this is just be a little careful here. I think your thinking is correct. Now that I'm seeing what I'm hearing from Peaky, but be careful. Basically, I'm saying be careful.
It's just an opportunity that presents itself.
It is
very often.
It is an opportunity, but I'm just saying to you, risk reward. You could look back and say, "Oh, I wish I had." But what if you were in it and went the wrong way? Then you say, "Well, I wish I didn't even make the call." So just be careful. That's what I'm saying. I would just say that on the way down, after this, I say, okay, you got a good potential, but now that it's holding so well, maybe wait until tomorrow at 10:30 Eastern time. I'll talk about it on the show tomorrow. We'll look at it and see what's going on.
All right, that sounds good, Baz. Appreciate it. You have a good one.
Thank you very much, and good call.